The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to an introduction to Nadex binary options. My name is Todd Rich. I am with Nadex, and I will be taking you through this presentation today. I want to thank everyone for joining me. I hope everyone had a very nice, pleasant, and happy Thanksgiving. And here we are, December, and I don't even know where this year has gone. I am completely perplexed. I know that Webster came out with their word of the year. Personally, I think the word of the year should have been unprecedented. Literally, the word unprecedented would have made the most sense to me. But let's go ahead and jump into our presentation today, an introduction to Nadex binary options. Before I go any further, this presentation is sponsored by our compliance department. I am going to leave this up for just a few moments, give you an opportunity to take a peek through it. But essentially what it says is trading involves risk, that you are responsible for your own trading decisions and they are done at your own risk. And then lastly, this is important. This is an educational session. Please don't construe anything I say as a buy or sell recommendation. And in fact, toward the end of the session, we are going to jump over to the platform and I'm going to do a little show and tell because I think the message often resonates better. It's when you can see it in action, and it really does help, particularly if you're new to binary options, on how you can navigate the platform and then leverage our platform for you to get into the binary options markets. All right, so how are we going to go about doing this today? Before, I forgot. I like to throw this in up front. Here at Nadex, we're here to help you. And one of the best ways that we can help you is if you let us know you need some help. So please, if you need some help, contact us, email us at customerservice@nadex.com. We even have a little chat function that on our website, which I'll show you. And then I am going to tell you right now, I have my colleague, Sophie, in the background, who is here to answer your questions. So there is a little questions box on the platform there. If I go too quickly through something, or it doesn't make sense to you, or it doesn't resonate, or you'd like a little clarity, or if you've got questions, any questions at all, type them in. Sophie is in the background. In fact, if you could do me a favor, periodically, just put something in there just to make sure that she's awake. Because I'm going to check in on her. So please interact with us. We're here to help. And Sophie is back there right now live. She's a great resource if you've got questions as we go. All right. So what are we going to do today? What are we going to be covering? I'm just going to go through this quickly. One, I want to talk about who is Nadex. Some people aren't really sure who we are, and I'd like to give you a brief history of us. And then we're going to talk about what is a binary option. We're going to define them, and we're going to talk about how they work. And particularly, we're going to talk about the risk reward. All right. And then we're going to talk about how binaries, the price of a binary can change, particularly as the price of the underlying asset moves and as time moves. And it's really important to understand that because that'll give you a better feel for how the pricing of a binary option works, in which will even further help you in terms of trading them. I'm going to go through the different choices. Nadex is very different than other binary option providers out there in terms of the variety of choices that we offer. And then, as I mentioned, we're going to do a little show and tell, a very practical demonstration on the Nadex platform. And I think with that, it should solidify, and we're going to go through these are real examples. Again, not a buy or sell recommendation, but some real examples on the Nadex platform. And again, please type questions into Sophie as we go. And I will also try to monitor those as well, because the truth is if you've got a question, there's a high likelihood that someone else on this also has a question. And so I will definitely peek in at those as I can to make sure that I'm answering them. Okay, So let's start having some fun with that introduction. All right, first, who is Nadex? What does Nadex even stand for? Nadex is short for North American Derivatives Exchange. And who are we? We are a properly regulated exchange. We are regulated by the CFTC, the Commodities Futures Trade Commission, the same people that regulate the Chicago Mercantile Exchange, the CME, or the Intercontinental Exchange, who owns the New York Stock Exchange, ICE. We report into the same regulator. We are a fully electronic exchange, and we are designated as a contract marketplace. So we list contracts, but we are also a clearing organization. What that means is you don't have to worry about who's on the other side of your trade. We make sure that no matter how everything works out, that if you make money, you've got access to your money. It's in your account. It's in segregated funds, and all of that. You can put money in, take money out very easily at Nadex, but we are regulated. I can say that we are the premier regulated exchange for binary options in the United States. There is one other regulated exchange which has some weather contracts. But any other binary options exchange that you see when you're in the United States, it's going to be, it's a good chance it's an offshore exchange. And with that, when you're dealing with an offshore entity, my advice is caveat emptor, buyer beware. If they're not regulated, you've got no recourse if something goes wrong. So we have to adhere to all U.S. regulatory policy. And that is something that differentiates Nadex from a huge chunk of binary option exchange places that you might find on the internet. And the other thing that we've done is we've designed contracts specifically for the retail trader. There's not a huge capital requirement to come into our markets. You can access price action in a variety of products, whether it's foreign exchange, commodities, indices. We've even got some event contracts, but you don't need large quantities of money to get into Nadex, and it's a very low cost of entry. And all of our products, everything that we've got, I mentioned they're fully collateralized, meaning you don't have to worry about who's on the other side of your trade, but they've all got defined risk. Everything that we list, all of our products that we trade are defined risk, defined reward. So particularly for a new trader, if you've never really traded much before, at Nadex, you know exactly what your maximum potential profit, maximum potential loss are before you even enter trade to make sure that you're taking on risk that you're comfortable with. There's going to be no surprises. There's going to be no margin call or anything like that. It simply doesn't happen at Nadex. We've got these very low cost, low dollar contracts designed for individual retail traders so you can access price action in these markets, but do so with known risk. All right, that's Nadex. Now let's talk about, and we've got products. I know this is the first part of a two-part series. Next week, I'm going to be covering knockouts. So I'm going to do this exact presentation for knockouts. And then the week after that, I'm going to actually talk about call spreads and call spreads versus knockouts because they're similar. So if you haven't registered for those, you'll look on the Nadex website later and you can register for those webinars later. Now, what is a binary option? First, a binary option. It is a short-term defined risk, defined reward contract. And I emphasize short-term. And when I say short-term, that can mean different things. It could be 5 minutes. It could be 20 minutes. It could be 2 hours. It could be a day. It could be up to a week. But short-term price action. And a binary option is a statement or a prediction that has 3 components. The 3 components are an underlying market, then there's the condition itself, which is often called the strike price or the level, and then there's a time. And as I mentioned, it could be 5 minutes, it could be 20 minutes, 2 hours, daily or weekly. Okay? So it's got 3 parts. And when you're trading a binary option, it doesn't matter whether you're buying it or selling it. And you can sell these. That also differentiates Nadex from other binary options providers. You can either buy them or you can sell them. Is that the risk and the reward is capped. It's a known amount, and we calculate it for you on our platform on the order ticket. So you know if you're buying or selling a binary option, you know what you're getting into before you get into it. And it will trade. It will trade in a range, and the price of a binary option will trade between 0 or 100. It's going to be somewhere in the range between 0 and 100. Now, I say it's a statement or a prediction, and that is a binary option. It's will something happen? Either the event is going to happen or it doesn't happen. And at the end, if the event happens, so the statement or prediction is true, the binary option will go to 100. And if it's false, it will go to 0. That is why it's called a binary option. In the end, there are only two choices. So in the end, it either is 100 or it is 0. That's it. That's a binary option. Now, the price that you see when you start looking at binary options can be thought of as reflecting the probability of the event being true, as the event occurring as determined by the marketplace. So when you look at the price, if it's something's trading between 0 and 100, right? If you see something that's trading at 50, the market is pricing that as a 50% probability of the event being true. That also means the market's pricing it as a 50% of it being false. We're going to get into that in a second. And just like any other options, or any other product, particularly with options, with a binary option, the time to expiration and volatility of the product will be factored into the price, into that probability. If something, as the marketplace prices the probability of an event being true, if there's a lot of time, they're going to factor that in, that there's a lot of time for the market to move around and for the prediction to either be true or false. When there's a very little amount of time, they're also going to factor that in as well. And volatility as well. If a product is swinging all over the place and moving up and down and those probabilities will change based on the volatility level of the product. All right, so let's take it one step further and talk about the dollars, because we talked about these being retail focused products designed for the retail trader. It trades between 0 and 100, and we also made the contracts worth exactly $100. So it makes it very easy. If you trade a binary option, in the end, it will either be worth 0 or $100. That is it. Again, binary in nature. And what happens is you make a prediction. If you trade something that is, say, a 60 and you buy it, all right, you buy it at 60, you're going to be risking $60. That's the most you can lose because you bought it. If the event becomes true and it goes to 100, you'll profit $40. If the event is false and it goes to 0, you'll lose your $60. Now, the interesting thing is you can also sell it. If something is trading at 60 and you think, no way is this event going to happen, you can actually sell it at 60. Now, what's the worst case scenario? Is it goes to 100. If it goes to 100, you lose $40. So here, if you sell a 60 binary option, you're going to risk 40 because you could potentially lose 40 if it goes to 100. But you're risking 40 to potentially make 60, because if you think it's not going to be true and it's false and it goes to 0, you'll risk 40 to make 60. So that's where, when we talk about fully collateralized, whenever the buyer buys a binary option, that's the price that they're going to pay. That's what they have to put up, because that's the most they can lose. A seller is going to have to put up the most they can lose, which is 100 minus the sell price. All right. So both sides have put up the maximum that they could potentially lose. Now, again, as I mentioned, that's the collateral. Your reward is the other way around. If I buy a binary option, the maximum I can make, because it can go to 100, is 100 minus what I paid for it. That's what I could potentially make. And with a seller, I sold it. It can only go down to 0. So whatever price I sell that, that's the most a seller can make. Okay, so that's the dollars. The dollars are pretty easy to understand because when you're looking at the price, that is for one contract, that's the dollar amount. We made it sort of intuitive for you so that you don't have to really think about it. But it doesn't matter in as much as we're going to show you that on the order ticket. We calculate it for you just in case you got something backwards. Now, on an order ticket, this is what you're going to see on an order ticket. First up, you're going to notice that there's the condition. And this is the statement. And it's got all the components, the 3 components of a binary option. In this particular example, it's will US Tech 100, which is the NASDAQ. All right, this is the NASDAQ. So we've got a product, finish higher than 9460. So that's our condition. Will it be higher than 9,460 at 4 p.m., 4:15 p.m., which is the next day, because we can see it expires in 18 hours up in the upper right-hand corner. If you look, it's got 18 hours to go. So it's got all 3 components. Will the NASDAQ be higher than this price at this time? And you get to make a prediction. You can either predict, yes, it's going to be higher, or no, it's not going to be higher. If you think yes, you buy it. If you think no, you can sell it. Now you'll notice there are prices that you can buy or sell at. Now, this is something else that makes Nadex very different than other providers out there, is you do not have to trade exactly on those prices. If I want to middle the market, if I wanted to potentially buy one at 48, I can put a bid in at 48, saying I want to buy one at 48. Now, is it going to trade? I don't know. Someone else has to sell it to me, but I don't have to pay 53.5. I can try to get a better price for myself. We have a centralized limit order book like any other proper exchange. So you can either join the bid, you can go between the bid ask spread, you can put an order away from the market if you like. You can absolutely do that on Nadex. We allow you to do that. On the order ticket, you'll see the price. So as I mentioned, if I want to try to buy one at 48, I can. And when I do that, it will calculate for you what your maximum loss or maximum profit are before you even place the trade. So if I were to buy one at 48, I know the worst case scenario is it's false and it goes to 0. I would lose $48. Now, if I bought one at 48 and it went to 100, I was correct, and the statement is true. It would go to 100, and I would make $52. So I'm risking 48 to make 52. All right. So hopefully you're clear on that on the order ticket. Now, what I would like to talk about is the price as well. As I mentioned, that it is the probability of the event occurring. And that is by the marketplace, right? The marketplace is going to make changes as the price of the underlying moves, and we're going to go through that, as well as time moves. Now, when I say could reflect the probability, it's the dollars that you're trading, but it's also the probability that the marketplace is putting on the event being true. So if you saw a bid ask or a bid offer of the bid at 75 and the offer at 77, let's take the midpoint, that's 76. At that moment in time, the market is pricing the probability of that event occurring as 76% being true. Now that is going to move. That price is not stagnant. It's those probability prices will move as the price of the underlying changes as time goes on. Now, it is important to note that the price of the binary option does not have to move in line with the underlying market. And I'm going to show that to you, particularly as we get very close to settlement or expiration. Again, volatility is a component, and time is a component. So just because you buy one and if the price of the underlying ticks up, it doesn't necessarily mean the price of the binary option will tick up. And again, I'm gonna show you this very clearly. The timed expiration and the volatility of the underlying can impact the price of the option. Okay? And I just wanted to be clear on that. And let me just do a quick check here because I did see some questions. So how can you go between the bid ask spread? I will demonstrate. I will show you that when we do the practical example. I will actually in our demo environment, and if you don't have a demo account, I would advise you get one. I will actually do an example. I will show it to you and you'll see it happen. You can place an order between the markets, and I'll even place an order away from the market. So I will definitely do that for you. Okay. All right, now I want to walk through an example of how a binary option changes. And I'm going to walk through 3 examples. And hopefully you can follow me as I go through these, as I talk through them. And after that, I got a couple other things I want to cover before we go over to the platform. And we really, and you'll see it. It'll all sort of make sense. So here I've got a chart, and this is a chart of the euro US dollar. And we had a prediction. Will the euro US dollar be greater than 1.14 at 3 p.m.? All right, yes or no, will it be higher than 114 at 3 p.m.? And here's the 114 price, okay? That's the price that's the strike price, that's the condition, okay? If you were to buy this binary option, you would need it to settle above that 114. If you sold it, you would need to have it settle below 114. Now, let's take a look at the price of a binary option over the course of the day. So let's just assume this is one day. And early in the day, the price of on the chart is clearly showing that the euro US dollar is higher than 114. Now it's early in the day, but it's higher than 114 already. So the market is currently pricing it at 54.58 at a 56% probability of being true. That's early in the day. And the reason it's 56% probability of being true is because it's above 114 already. Right? It's already above it. So it's a higher than a 50% chance. Okay? Now, right after this, the price of it drops. And now it's below. It's just a little time. Time has moved forward a little bit. And the price of the binary option did drop in line with the movement in the euro US dollar. The binary is now priced at 42.46. So now the market's pricing it at a 44% probability of being true. And there's still a lot of time left in the day, but it's below 50 because it's currently trading below 114. And so the market's pricing the probability of it ending above 114 below 50%. Now, as the day goes on, we skip forward. You know, it goes up, it goes down. And notice that at this point in the day, now we're at midday, and the price of the underlying of the euro US dollar is roughly where it was earlier in the day. But look at the probability. The probability decayed away some. Now it's priced at 34.38. So now they're only putting it at a 36% chance of the statement being true and this going to 100. Now, what happened? Time went on. We have a half less of a day. You know, some hours have ticked away and we are still below 114. So it's below 50%, but they're not giving it as high a probability because there's less time. So time impacted the price of the underlying. The underlying price is roughly where it was earlier in the day. In fact, it actually looks like it's a touch even higher, but the price of the binary is lower. All right, so time ticked on and the price of the binary changed. Now, very quickly after that, it rallied. All right, now we are above that 114 level, and now the market's pricing it up at 74%. All right, there's only a third of the day left, and we're above 114, and it's giving it a high percentage probability. But whoa, lo and behold, it sells off again. Um, Now, look at what happened to the probability. I mean, it went from 74 down to 24. It dropped 50 percentage points, which means the price of this binary option changed $50 very quickly as you got closer to expiration, because now you're below that 114. Now here's where it gets crazy. I mean, it can make some very big swings when there's less time. The price movement in the binary option can be amplified. Notice we had a similar move earlier in the day, and it only went from 56 down to 44. And here we are late in the day, and it dropped from 74 down to 24. And in a surprise ending, it rallies going into the close, and it goes to 100. So what the point to take away from this is that the price of that underlying, the price of the binary option, is going to move as the price of the underlying moves. And earlier in the day, as the price of the underlying moves, it might not have as dramatic impact on the price of the binary option because there's still a lot of time left. And toward the end of the day, price movement in the underlying could have a very significant impact toward the end of the day because there's less time for something to change. But because of that, you get some pretty significant volatility. So if you're looking for price action and you want to see prices moving around, some of these really short-term contracts could be interesting to you. If that really extreme move in the price of the binary option concerns you, you can use a time frame that's longer. So maybe look out for a week or a day versus 5 minutes or 20 minutes. And I'm going to show that to you. Let's go quickly through two other examples because this is a volatile market, right, where everything was jumping up and down and was moving around. Let's take a look at two stagnant markets, okay? And the first one I'm going to show you is it's the same situation. We're looking at the euro versus the US dollar at 1.14 at 3 p.m. But here, it's not very volatile. All right, this is the price is not swinging around, and in fact, it's almost pretty flat, and it consistently stays below 114. Now, what happens early in the day? Right, we saw this. It was around a 44% probability. Why is it 44? It's below 114, but there's still a lot of time to go, and we don't know what's going to happen. But as time moves on, it starts decaying away. All right, the probability of it making it above 114 starts dropping. And in fact, this is an interesting one because when there's half a day to go, there's still a 34% chance of something happening, of this being true. Notice as we skip right towards close to the end of the day, even though the price of the binary price of the underlying, has gone higher. You can clearly see the price of the underlying has gone higher. The price of the binary option has gone lower. It dropped from around a 34% probability down to a 20% probability. And that is, even though it's closer to 114, there's very little time for this to be true. And in the end, it just goes to zero. Now, if somebody early in the day thought this was going to be true and bought it around 44 and they did nothing, they would lose their $44. If somebody early in the day said, I don't think it's going to get up through 114 and I don't think it's going to settle above 114, they could have sold that at 44, saying, I don't think this is going to be true. Nadex allows you to sell it, and you would have actually profited $44 if it went all the way to zero. Risk on the other side, $56. If it went above 114, it would go to 100 and you'd lose 56. So I want to emphasize that you can buy or sell these. All right. Now, let's take a look at a similar example where it's kind of flatlined and stagnant, but it stays above So again, we're not volatile, but we're just going to stay above. Early in the day, it's just above 50%. Midday, even though the price has gone down a little bit, it's the price of it has actually gone higher. It's 66%. There's not a lot of volatility. It's not making a lot of swings. It's staying above 114. Because volatility is low, the probability of this being true is higher. And as we go throughout the day, you can see it goes, it continues to increase in the probability of success, in the probability, not necessarily success, because, but the probability of the statement being true, the probability of the statement being true, and then it goes to 100. All right, so I wanted to show you, I wanted to walk through that. We're going to see that on the platform. You will actually see it happen, and we will go through an example in our demo environment. Now, something else that Nadex does, which I happen to really like and makes us different, is we offer you choices. We offer, some people don't like that, but we're trying to accommodate, what is it, what is your opinion of what's going to happen, and how would you like to implement at the marketplace? And people have different trading styles, different trading strategies. So we offer variety. So for each underlying market that we have, and for each time frame, whether it's 5 minutes, 20 minutes, 2 hours, daily or weekly, we'll have multiple conditions. So you can choose which strike price and condition fits your trading style. And if there's extreme volatility, we'll be adding strike prices. I mean, we're constantly monitoring our markets to make sure that there are enough choices for the traders in our markets. Now, here's an example. Here's the euro US dollar. All right, because that's what we've been using all day. Notice that we've got a contract that expires in 9 minutes. All right, it was a 2-hour contract. There's a 2-hour contract after that. There are dailies, 3 a.m., 7 a.m. So it's every 4 hours. Okay, so there are choices in expiration times, in settlement times, from 9 minutes, a couple hours, 12 hours. I mean, every so many hours, to a daily one and to a weekly one that's even got 2 days. So we offer a variety of choices for you to choose the timeline that suits you. Now, along with that timeline, we'll offer multiple strikes. Okay, so here's just in the weeklies, there's almost 3 days left for this particular contract. Notice that we've got different conditions. Will the euro US dollar be greater than 108.25 or 1 spot 7.25 or 1 spot 6.25? And each one of those probabilities are going, I mean, each one of these levels at this moment in time, we could see that the euro is at 1 spot 078. Okay, so it's in between these two. Right, it's in between these two. The 1 spot 725 is up here at 73% because it's currently trading above that. Right, it's already higher than this. And the one that's out of the money, the next strike up, the 1 spot 825, it's still got a ways to go. It's below that, and they're only giving it a 34% probability, right in the middle there. So we give you a choice in time, and we give you a choice in conditions or strikes or levels. Now, one thing I have not talked about yet, and if you take nothing else away, this is true for any option, and this is true for all of Nadex products, whether they're knockouts, call spreads, or binary options. But when trading Nadex binary options, all right, this is really important. When you're trading Nadex binary options, just because there's an expiration time associated with the contract does not mean you have to wait until then to see what happens. Right? This is the cool thing about Nadex markets is you can choose to exit the position early if you so desire. And you can exit it either for a profit. Oh, I made a partial profit. I bought one at 20 and now it's 50. I've made $30. I can go ahead and lock in my profit. Thank you very much and move on to your next trade. You can also do it to stop your losses. I sold one at 40. It's now trading 60, I'm going to buy it back and take a $20 loss. I was wrong. I changed my opinion. I went out. So you can choose to close your position early. In fact, many of the people that tend to be more successful when trading binary options do get out. They don't wait for that surprise ending that could happen in the last couple minutes. It's not worth the risk. Take your, people will often look to take their profits or cut their losses early, and manage their own risk versus letting the market dictate that for them. That's one thing that a lot of options traders don't like, are surprises. So let's not have any surprises. If I predict something's going to go up and it's working out in my favor and I have the opportunity to take a profit, you might want to consider doing that. I think the saying is nobody ever went broke ringing the cash register. That also means, though, managing your losses, not recognizing maximum potential loss if you're wrong. So very important rule. I can't emphasize that enough. You can get in and out of these. In fact, that's one of the benefits of Nadex, is you can day trade these, and you could day trade them as much as you like, and there are no day trading restrictions, unlike equities markets and other markets where there are restrictions on what you can do and can't do. At Nadex, you can trade as much as you want during the day, and the fact that everything is fully collateralized, you're not going to have to worry about margin calls or anything of that nature. You trade what's in your account. All right, that's enough of the slide session. I want to do the practical demonstration. Again, I want to emphasize, if you've got any questions, concerns, email us, customerservice@nadex.com. I would highly recommend you follow us on social media. In fact, one of those I would say is really, really important: the Nadex YouTube channel. If you go to YouTube, search for Nadex, follow our channel, subscribe to it. I'm going to tell you every morning we do, early in the morning, our chief compliance officer, our chief commercial officer, Travis McGee, does a 1.5, 2 minute announcement of the news that's happened overnight, early in the morning. Hey, what's going on in the world? What do I need to know? How could that be impacting the markets? It goes up there. And then at 8 a.m. Central, 9 a.m. Eastern, every day for 10 to 15 minutes, I do a morning analysis. We actually look at potential price levels in a couple of products and a couple of potential trade setups. Every morning for 10 or 15 minutes, we take a look at what the news was and how could that impact the markets, and we look at Nadex markets. And hey, where are we seeing potential support? Where are we seeing potential resistance? How could you use our indicators and drawing tools to put them on a chart to help you navigate these waters a little bit, and it might help you identify some markets that you might not traditionally look at, but you wouldn't know that we're doing that live every morning, 9 a.m. Eastern, unless you followed our YouTube channel, subscribe to it. You can even set reminders on those live streams. So you can do that, so you just remember. And if you miss it, the recording is up immediately. So if you're an hour late or 2 hours late, you can always go back and watch that quick 10 minutes and get a summary of some analysis that we did before the market opened. All right. Hopefully you've been, if you've got any questions, you've been getting those answered by Sophie in the background. I am now going to switch over and let's do the practical application. Let's take a look at the Nadex trading platform. So if you give me a second here, bear with me. I'm going to switch what you see. All right, you are now looking at the Nadex website. All right, one thing I wanted to point out, notice that we do have chat with an expert down here. You can use this functionality, which will help you engage with our team. I'm also going to point out that if you look under learning, under webinars, you can register for any upcoming webinars. They're all listed there. You can also look at recordings in an archive of past webinars. This webinar has been recorded or is being recorded. It will eventually be up there. It usually takes us about a day or so to render it and get it posted. But it will also be on our YouTube channel. So one of the nice things about subscribing to our YouTube channel is whenever we do any video, we put it out there and you would get alerted and notified when we're going live or when we've posted new content. So definitely want to point you to that. And stay tuned. We're going to be doing some special education sessions. I know we're doing one in the new year that is going to be some great trading skills for traders. Fundamental analysis, technical analysis, trading psychology. So stay tuned. I'm putting a little teaser out for it. All right, I am now going to go ahead and log in to our trading platform. Now, notice one, I am in a demo environment, not a buy or sell recommendation. If you don't have a demo account, they're free. You can sign up for one. I will tell you that we do stream live data into our demo environment, but it is a demo environment. So your experience will be very different in a demo environment than would be in a live environment because you've got different people looking at it for different purposes. In a live environment, there's a lot of participants who are all banging away at each other, trading with each other, because anyone can buy and anyone can sell. In a demo environment, whoever happens to be in there when you're looking around. Now, if you haven't been in our platform, our new platform before, we have our on the left-hand panel is all the products. At the bottom is where you look at your orders, positions, and history. And I'm going to move that away for the moment. These little blue buttons can hide them, but we'll bring it back. And then there's the workspace, all right, where we're going to see the charts and the order tickets. If you haven't done a walkthrough, you can absolutely click on this little video and it will give you a walkthrough of the new platform and how it works. So here we are with binary options in the upper left-hand corner, and notice that we've got binary options on indices, all right, and they are global indices. So if you want to trade the DAX, the FTSE, the Nikkei, the Russell 2000, the S&P 500, the Dow Jones Industrial Average, the Wall Street 30, or as the NASDAQ, the US Tech 100, we've got indices, and notice that we've got, excuse me, I had to take a little sip, different expiration times, different settlement times, hours, daily, and weekly. We've got foreign exchange pairs, all right, and probably some of our most popular products. I'll let you scroll through. We've recently added the Mexican peso, but we've got all the main pairs up there, and with some additional ones. We've got commodities, whether you're looking to trade around oil, gold, natural gas, and silver. In fact, gold might be kind of fun. I think that's where I might do my example today, just because gold's been it's been gold's wild ride over the last week. And then we even have event contracts. All right, so these actually settle tomorrow, where you can are the economists predicting well? We've got the unemployment rate. Tomorrow they are going to come out with the unemployment rate. We are expecting, and you can see that they're expecting 6.9% unemployment. Will the unemployment rate be 6.9%? Above 6.9%? And that's actually trading right around the 50-50 probability. If you think unemployment rate has dropped, there are other, you can say, no, I don't think it's going to be above 6.9%. In fact, I don't think it's going to be above 6.8%. You can choose to sell. Notice that whenever you do that, your maximum profit, maximum loss over here. But we've got event contracts, and there's even tomorrow, there's the non-farm payrolls. Are we adding people to the payroll? Now, for an example on our binary options, let's start with gold. Okay, I'm going to start with gold, and I'm going to just look at a weekly contract. And notice that under the weekly, we've got a bunch of different choices. And I am going to just pick one of them. And I'm picking the one that's right around 50%. So I know that the gold is trading right around there. In fact, we know gold is trading right around 1842. So the 1843 contract is going to be right there. Now I'm going to hide this. And as I mentioned, it's been gold's wild ride. Here we are just a few days ago, gold was up here around this 850 level. We saw it sell all the way off. Um, Gold was in a downtrend. Why was that? Because they were talking about not doing any more stimulus. There was some comments that we don't need to do more stimulus, that we're going to come out. And what more stimulus would mean would be pushing more money into the economy, um, which would you know would impact inflation. So you ended up seeing gold come down, and it's actually done a very much of a V-shaped recovery as comments have changed around whether we're going to do stimulus or not. Now, when it comes to binary options, oops, let's just kind of zoom in here, and I'm going to give us. You can see that there are the choices over here on the right. And if I thought gold were going to continue higher, okay, and I wanted to buy gold, I can click on the ask and notice how it shades the chart blue. Okay, the chart is blue. This is where I would need gold to settle for this to go to 100. If I thought gold were going lower and I were to sell one, it's red, and this is where I would need gold to settle for it to go for it to be a profitable trade on the short side. But let's just say I thought it was going to go higher. Okay, and I'm just clicking the buy side again, not a trader recommendation. We asked earlier, how could I middle the bid ask? Well, I want to buy. All right. Now I see that there's a 51.5 offer, but I don't want to pay 51.5. It's a little bit below there. I want to pay 47. I can put my price in at 47, and I only want to buy, you know what? In fact, I don't want to buy one. I want to buy two. Okay. Now, notice when I do that, it tells me my maximum loss and maximum profit are calculated for me. Because I put two, it's 2 times 47, so it's $94 of risk. I'm going to put that back down at one. There's that 47. How much could I make? 53. If I like the order, I click place order. Now, what happened? Look at that. There is my one lot sitting there. Remember, I'm in a demo environment. I am going to bring up and you can see it's in my orders panel that I'm trying to buy one at 47. I middled the market. Okay. If I want to change my bid, all right, no one's selling it to me at 47. Maybe they'll sell it to me at 49. I can click on that. It populates my ticket. I can either delete it, right? So no, I'm going to cancel my order. No, I'm willing to pay 49, and I'm going to amend my order. And it amended my order, and there's my 49. And you can still see it in my order, down in my orders as well. Now, am I going to trade that? I don't know. Again, I'm in a demo environment. I don't know who's looking here, but I can leave my order and I can middle the market. All right. Now, what I am going to show you, let's just buy one. And I'm going to go ahead and just make it 51. I'm just going to take whatever I can get, amend my order. All right. Now, notice that I no longer have anything in orders. Look how quickly it did. It executed. I bought one and it says that I paid 50.75. That's the price that I got. Okay. Now, let's just put 50.75 in here. All right, I bought one at 50.75. That's the most I can lose. The most I can make is 49.25. All right, because it goes to 100. Now, do I have to wait? The answer is no. I know that I've bought one. All right. I mean, it's telling me I've got a position here that I'm +1 and that I need it to be above 1843.50. Okay. Now, what if this gold were to rally and it were to go to 61? Would I want a quick $10? And if I wanted to do that, I could absolutely put an order up here. I can click sell and put an order above the market. So let's put it at 66. 60, what did I buy? I paid 50.75. Let's make it 60.75. A nice even $10. Okay. Now, if I wanted to put my offer up there above, okay, I can place the order, and notice it's telling me that I've got an order above. I'm trying to sell one. So not only do I have a position that I bought at 50.75, I am actually trying to sell it up above at 60.75. So if I were to walk away from my computer and gold were to go up some, I would take my profit. Now, again, I don't have to wait until expiration. Now, if gold were to start going lower, all right, now I'm, look at it, it's ticking lower, and I think it's going to keep dropping. I paid 50.75. You know, if it were to get down around 30, I could say, forget it, sell it. I want out. I don't want to experience maximum loss. I could get out for a partial loss. So you're not married to your position. You can trade it. Now, what I would like to do is I really want to show this amplified. Okay, so we are going to go to and let's just use the euro US dollar. Okay, and there's 3 minutes and 40 seconds left. Okay, so we're looking at a very short-term contract. And let's make this 1 minute, and let's zoom in here. Okay, and I want to see what's happening here. Let's get rid of this. Okay, now we can see where the euro US dollar, this is going to settle in 3 minutes. Okay, and since it's currently below 112, 120, 135, notice how the probability on this is only around 24%. And notice the probability down here is high. Now look at this. As it ticks higher, look at these probabilities change. And it happens quickly. It happens very quickly. And now we can see that it's actually trading right around a 50-50 probability. What's going to happen here? If I think this is going to keep going lower, I can sell one. Let's go ahead and let's have a little fun and sell one. Oop, I tried to sell one at 40. Oh, I did sell it. Okay. I sold one at 40. Okay, and we can see that in my positions. Now, what can I potentially lose? I sold one at 40. I could either lose 60 because it goes above, or I can make 40 because it goes to 0. And I don't know what's going to happen. There's still 2 minutes left to go here. And I don't know. I mean, we're right here. Notice how the probability down here is almost 100. Oh, it's ticking higher. All right, so it's starting to go against me. What do I want to do? There's only 1:52 to go. I could just buy it back and minimize my as it's going higher. I mean, look at this. This thing is going higher. Maybe I'm not comfortable anymore. I'm going to buy it back, and I just bought it back, and I'm out. I lost. Okay. Now, should I have bought it back? I don't know. It's starting to tick back down again. I locked in my losses, and maybe I didn't need to do anything. This is what I'm trying to convey to you is I don't know what's going to happen. And in the last, there's 1 minute and 15 seconds to go here. The probabilities on these are going to change very dramatically as it keeps ticking higher. This is either going to go to 0 or 100. Now, the one thing I do want to point, and look at that, now it's ticking lower. I don't know what's going to happen if you're looking for some dramatic price action. These 5-minute binaries could be interesting. All right, if that's what you are looking for, if the price swings are too much for you, you should be using a little bit longer term binary option. Notice as we get down to around 30 seconds, around 20, 25 seconds, the prices, look at this one, which was totally worthless, this 112, this 120, 137, it started ticking up. Now, I told you around 25 seconds, everything went blank. Now, why is that? In the last few seconds, no one wants to take the risk. No one knows whether this is going to go to 100 or 0, or this is going to go to 100 or 0. We got 9 seconds left. And it looks like the one that I bought back, I'm glad I did, because it's going to settle at 100. And this one just expired, and this one settled at 0. So, I mean, that was crazy. And right when that happened, this one settled at 0. This one went to 100. Notice we got a new 5-minute clock. So when I go back in here, and I'm going to hide this again, notice that my probabilities have all changed. And I mean, this is the one that we were looking at, the 121.35. It's now, there's 4.5 minutes to go here. This one's all the way up around 90, 87%. And it's the 121.37 that's trading around 50%. So you really get it amplifies the price movement when you look at these short-term durations, these 5-minute binary options. Some people, um, some people, want that price action that's very dramatic, and they want, I mean, that's what they're looking for. Others want to make their prediction and maybe, with a couple of days, and as things move around, they'll get out of their position accordingly. It all depends on what your trading style is. What are you looking for? If you want the adrenaline and you want the fast-moving price action, you can get it in short-term binary options. And in those, which you find over here, those are 5 minutes. We do have 20-minute binary options. Those are all in the indices, the US indices, the NASDAQ, the S&P, the Russell 2000, and the Dow Jones. And then we've got hourly, daily, and weekly across the board, whether it's in the commodities. Let's close. There we go. Whether we got crude oil, gold, natural gas, and silver. I mean, natural gas has been crazy. If you haven't seen natural gas chart today, it's just been, well, it looks nice now, but when I back it out, yeah, natural gas has been in a big downtrend. It looks like it rebounded a little bit. One last thing I want to point out, we do have some great functionality on our charts on Nadex. You can set your date range, you can set your time intervals. We've got a variety of technical indicators that you can populate on your chart. So it all depends on what you want to put on here. You can customize them if you like. And then we've even got drawing tools. If you happen to want to put on your channels, your trends, your own support and resistance levels, you want to do Fibonacci. I mean, Fibonacci is easy as you can see we're clearly in a downtrend. So I'm going to start in the upper left-hand corner, follow the trend down to the bottom right-hand corner, and then extend it out. And you'll get these retracement levels that could be interesting levels for you to make trading decisions around. So we've got some robust trading functionality that you could use for technical analysis. It all depends on what you're looking at. But in our binary options, different durations, different strikes. It's a prediction around a market, and we've got different markets, different products in those markets. Is the prediction, is this condition going to be true or not? And then within the certain time frame. And in the end, it's a binary. It either goes to 0 because it's false, or it goes to 100 because it's true. With that, I want to thank everyone for joining today. Again, this has been recorded. Look on our YouTube channel, subscribe to our YouTube channel, check out, you can set reminders for our daily morning analysis so you can catch those every morning if you like. Use the resources that are available to you on nadex.com. We are here to help. Please reach out to us and let us know how we can help you. I hope everyone is staying safe. I hope everyone is staying sane. And thank you for joining. Good luck in the markets.